Good afternoon traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen and euro dollar. I've also been asked to look at Bitcoin briefly as well, so we'll look at that as well. So to start with, we've got an inside bar forming on the weekly key level of 95.5. So to me that kind of shows the energy to the upside is being exhausted again. So I am looking more on the bearish side of the dollar. When we come down to the daily chart, we are resting at this daily 50 EMA, which has been kind of had been support in the past, but we chopped through it recently. So you got to confirm here, is this actually going to be the next leg up or is it going to be the next leg down? Personally, I think it's going to be the next leg down just because of how much the dollar's moved up since April, May this year. So it's moved up, got in a pattern, chopped around, struggled to not break 95.5 again. Looks like it wants to come back down. 93 looks like a nice area to expect it to come to. And if we just do our Fibonacci pullback, if it's on the weekly chart, it's nice and clean. We move down, we pull back up to the 618 level, and the Fibonacci extension is sitting right at 93. So 93 does line up quite nicely there for us to look for a bearish dollar until that point. When we come to the lower time frames of the 4-hour chart, we can see we're below the 4-hour 50 EMA, which has been respected briefly in the past. So we are looking for a pullback there, and we did say if we broke the 95.3 and retested it here in the 1-hour chart, we would be bearish as well. So you got the 1-hour 50 on your side, you're going to have the 4-hour 50 on your side. The only thing there haven't got on your side is the daily 50 EMA, and we just got to wait for that to break to the downside. So how does that look across other pairs? And on Aussie dollar, for example, here we are still in a downtrend here. I'm not going to say we're in a bullish trend whatsoever. And the only way this turns bullish for me, really, for the long term, would be a break and retest of the daily 50 EMA. Now, this has been tested so many times here. Now, if we do get another test here on the daily chart of the 50 EMA, I will be very concerned again to take it. Could be trading back into this zone here. So I'll just be on this pair, sitting on my hands, for example. Break and retest of the daily 50 is what I'm looking for to turn bullish. If it does do that, I would be expecting to pull back to the 75 and weekly 50 EMA. So the reason I say that is because these pairs don't just drop out the sky and carry on dropping. They need to breathe. And I just want to show you what I mean by this. We just zoom out here. We had this humongous drop from here to here. We did over several weeks. Bear in mind, this is the weekly chart. This is, guys. We had that there. And we pull back to this area here, which is the 382, just under 0.5. So the fact, again, we've just dropped out the sky. Again, we have from this on this pair here. At the moment, if the dollar does get weaker, I'll be looking for a pullback, and a pullback could happen at 75. So that does give you some indication to where the chart could go next. But before it does that, it must break the daily 50 EMA. So on the euro dollar, again, this isn't the greatest pair in the world. You got your weekly chart here. We tested the 1.14, which you can see in the past here, and we're now sitting around the 1.157, 1.155 area, and it's just a little bit messy for me. I'm not happy with this pair at all. I wouldn't want to trade it. It looks bearish and bullish depending on what time frame you look at. For me personally, is this a higher low here? Or is this a lower high here? Very hard to determine. I personally do feel that we would head up higher, but that's only just my gut instinct, and that's not really pure technical analysis here. Again, I can show you two ways of looking at it being bullish. That looks bullish. It's moved up, come down, tested, no problem at all. And likewise, you could say, well, Simon, that's a lower low there, so I want to do it like this, like that, and you got the same 0.5 at the daily 50 EMA. So just be careful in this pair. For me personally, to confirm the bull trend, you're going to have to start climbing, break above this daily 50 and start going from there. We look at the lower time frames of euro dollar. We are still trending upwards. The 4-hour chart clearly shows that. Inside bar at the 4-hour 50 EMA. Notice that the 4-hour 50 EMA has been quite key as well in rejections. So I'm just going to sit my hands in this one. There are better pairs out there to trade with, but there could be. I'm just slightly more on the bullish side here for euro dollar. Pound yen now. Let's take a little pound yen for you guys. Again, we are still in this range on the daily and weekly chart. It hasn't moved whatsoever. Bear in mind that a lot of yen pairs move crazily over the place. pound hasn't moved nothing at all. So my idea is still the same from last week. Wait for the breakout. And this is the 4-hour chart. Again, exactly in the box. We had this rejection here as well, and this rejection here as well. So for me personally, the 4-hour 50 MA doesn't mean nothing now. We're in a box, we're in a pattern here. So forget the 4-hour 50 MA. Just quite literally look for a breakout of this box. Just going to extend it. We did it like that last week. So there you go. Extended it here. Any break and retest of the box will give you the direction of where pounding will head next. I do feel we could head up higher due to the Nikkei looking to head up higher as well, where it is. So you know, a lot of stock markets crashed this week, and Nikkei itself did move quite a lot, so it moved down. And I just feel now we could move back up. So just keep that in mind. But like I said, break and retest this area here is going to be key to where you want to go next. So now on to Bitcoin. This is going to be a bit strange what I'm going to say here, but if this pattern does play out how it does play out the triangle, it's on the daily and weekly chart by the way, the expected pattern distance is $400, and I'll explain to you why I'd say that and why I say it with caution as well, because what I'm saying is really Bitcoin's crashing to zero almost. So let me explain to you what's happened here so far. So I just want to go to the weekly chart, show you the pattern, which many of you have probably seen as well. That's your triangle pattern, that is, okay? And we're at the bottom of the triangle pattern here. So if we have this style of move down and move back up again to test the pattern, test the downward sloping trend line and day 50 EMA, that does indicate it's a break and retest and confirming the pattern. Now we all know the pattern distance are 1 to 1, and we're all drawing the trend line from here at the top. We are. If we're all doing that, we confirm this trade. This is the weekly chart. It confirms the pattern. It does, and we all believe that the 1-to-1 pattern distance exists. Let me show you where the 1-to-1 pattern distance leads you. So it's from there to the top, but that goes to 1-to-1 or 1.0, $160. Now that is a lot of people say no, but you all trade off the same technical analysis here. So understand what I'm saying here, yeah. I'm not saying Bitcoin's going to zero, but it doesn't look very good for it. Let me explain why. So for that, we're going to delete this triangle now for the moment. We know the triangle exists. We've got that there. And let's now go to the monthly chart. I want to show you something here, guys. Volume. Volume represents interest in a chart, okay, of a certain time frame. Now this is the monthly chart here we got here. Now notice when I zoom out, volume was picking up over the course of the months, pretty much up to the super highs, and then we've got this bearish engulfing candle, and the volume now is just tailing off now. Now the rejections are at the same level, the volume's dropping off. You can clearly see the volume's dropping off here. So what that says to me is people are not very interested in trading Bitcoin. So either you're all holding and doing nothing with it, because this only tells you what's traded, or you close your positions out and kind of all walked away from it. Now, if that's happening and the rejections are of low volume, in most volume books it says that the rejection will break down, it'll pass through that key level. So in this idea, it's rejecting the lower level here, support of $6,000. It's advocating that it will then just pass through $6,000. Now, if it does pass through $6,000 and comes back to test $6,000, that's then confirmed the triangle, which then puts it down to $160, which also confirms the lower volume. So before, and I really mean this is really crucial here, before you make a decision, let the chart break and retest. Just let it break and retest, because you're either going to do something like this. It either does this, like that, puts a higher high in, and then obviously comes down to test that way, which obviously most of you want, clearly. But for that to happen, it has to be on higher volume. That has to break higher volume. It has to break this downward sloping trend on higher volume. It can't be a low volume move up, really, in all fairness. Just because you want to confirm it. You need the confirmation here. And likewise, if it's the other way around, if it breaks down there and comes back like that there, and again on high volume, if that is a high volume breakdown and then move back up, a high volume rejection of $6,000, that would confirm the triangle, and the expected pattern distance is down to between $100 and $400 a coin. If that does happen, that also proves this is not a currency as well. It debunks the whole entire theory, because this is based against the US dollar, and the US dollar is also looking bearish. So all dollar pairs are looking to gain strength against the dollar, except for Bitcoin, and all equities are looking to move lower again because the dollar's getting weaker as well at the moment. And yeah, so it's kind of a strange thing. So we are in a time of this, you guys have to sit and wait. I don't want to say it goes down to zero, but at the same time, it like I said, it doesn't look good at the moment. Just trade the break and retest is my only real suggestion for you guys. If you're looking for a smaller time frame type trade, then yes, rejection off this level here is good enough. You can go long back up to at least the daily 50 EMA there, for example. So if you're going to take a trade, you can enter it there, for example. Put your stop there. Definitely rejected it. You can get a little 1.5% trade there, something like that. That's just now, obviously. That's a safe stop as well. But like I said, be very careful.